Hello everyone, a very warm welcome to all of you. In this video, we are going to talk about US markets, and you must have seen many videos talking about US recession. Let us try to understand purely from the technical aspect whether this recession is a possibility, and if it will be a possibility, how deeper this recession is going to be and how it is going to affect the market worldwide. So, let us talk about US market, and for our analysis, I have considered Dow Jones Industrial Average because Dow Jones is the only index which has data, buying selling data for over 120 years. So, let us go and see what Dow Jones has in store for us. As you can see on the charts, I have a Dow Jones Industrial Average on a monthly chart in front of me, and right in front of you, you can see that this Dow Jones has made a top in the month of January 2022. So, here we can see that the Dow Jones has made a top, and then after that the prices are declining month over month. Now, there is a supply and demand, which is a very basic principle in commerce, and this is indicating the kind of supply which we can see in US market. Whereas, there is one more index in Dow Jones which tells you about the demand, and that is Dow Jones Transportation Average. So, in another window, I am going to open the Dow Jones Transportation Average chart on a similar monthly time frame. So, here I am going to open DJT. So, this is Dow Jones Transportation Average. Now, why these two indices are essential, why both these indices are important, is because you will see that there was a gap between supply and demand in Dow Jones since November 2021, and this is where the first signs of correction was seen. Whenever the major indices are going against each other, that is the period of conflict, and as a trader, one should be trader or an investor, one should be very cautious while investing in such markets. So, these are the things that we have to keep in mind. Primarily, Dow Jones Transportation Average, which in a way indicate the demand, has shown signs of weakness in the month of November 2021, whereas when we check this same thing on Dow Jones Index, in Dow Jones this has started from January 2022, right. So, demand was less, as a result the supply has to get hit, and now we are seeing the retracement. Currently, the recent top that has been made in Dow Jones is 36,900. Now, in stock market, there is a very interesting quote which says that the history repeats for itself, and when we can see Dow Jones for last maybe more than 125 years, it gives us an opportunity to look at a very interesting phase. There are time cycles by the advanced Gann study theory, and these time cycles keep on repeating with a specific period of time. Here we are going to take into consideration 90-year cycle, and in the era of a great era of depression, we had seen a similar kind of a situation. Let me just first show you what is happening right now, and then we will go back to the charts in the 1929. So, here we have a Dow Jones monthly chart, and as you can see on my screen right now, we have two specific tops. So, from here, if you can see, this is a dot-com bubble in 2000. From there was a correction. After that, there was a rally, and in 2008, subprime mortgage and then housing bubble, it has caused a major fall in US market. After that, we saw an unprecedented rally of about 471% from a 2009 low till the recent high in the month of January 2022, and this rally is about 471%. What if I tell you, when I say that history repeats for itself, what if I tell you that this kind of a phenomenon was already there in the past? So, if we go here, and again let us say if I plot Dow Jones index on a monthly chart, I will go to history and I will quickly go to 1929-0101. So, I am going to January 1929, and here we go. So, prior to great era of depression, we can see a top in 2016 and a fall. After that again a rally, and in 2019 we saw a bigger fall as compared to 2016, and then there was a massive rally of about 500% since the lows of 1921. This rally lasted till August 29, and from there we could see what is described as a great era of depression. So, this fall was imminent and it continued and made a low at around 40 US dollars. So, Dow Jones price at that point in time in the year 1932 it dropped down to $40, and from there the recovery was difficult. It took several years, probably 20-25 years for the recovery to surpass this level of 386 after this fall, and then eventually it went on to rocketing in a ferocious way, but it was struggling to go above this zone. Now, on a monthly chart we are looking at this. If we go to date range or a time period, we can clearly see that it took about 300 bars, which is roughly about 20-25 years from the top. If we check this from the bottom, so right from where the bottom has made, it is 268 bars. So, if I calculate 268 bars and divide it by 12, so it is about 22 years, roughly 22 years. So, 22 years is how much time it is taken by the US economy to recover to pre-great era of depression fall, right. This suggests that the US economy is headed towards a similar kind of a phase, and this phase can see a very dramatic, very drastic fall in US markets. Right now, if you see here, the third important point is that price point here is 386, whereas the right now currently the price point is at 36,900. We can just round it off to 37,000, and if this is 37,000, if you just reduce last two zeros, then it comes to 370, whereas the price at the time of a great era of depression was 386, and from that 386 it has gone down to 400. We can roughly calculate that this time around we may see Dow Jones at around 4,000 level, right. This is based on Dow theory primarily. At any point in time, if the current high is taken out, then this theory will be null and void, but as long as it is correcting, it is going into a bearish trend, then it is going to be a difficult phase. If I show you on a weekly chart or on a daily chart, the most interesting thing or most important thing for the Dow Jones is that in Dow Jones the Dow theory has changed completely. It is in a firm bearish grip, and if it bounces from here and soon if it takes out this high of 35,400, then we can say that this analysis is going to be wrong. And trust me, at this one point in time, I feel that whatever bearish analysis that I have made, I wish I am wrong, and I will be happy if I am wrong. But let us see, only time will tell us how this US market is going to behave. Now, in the coming month, we are expecting that there will be a Fed meeting and there will be an interest rate revision, interest rate hike. If that interest rate hike is around 0.5 basis point, that is still absorbed by market. This is what the market is anticipating. But if it is more than that, that will cause a severe mayhem in US market. And you know, we cannot decouple from US economy. Any world market cannot decouple from US economy. So we have to be part of what is in store, and these things are going to happen. Fortunately, I feel that India being an emerging market, very soon the US FIIs or the FIIs in general, they will realize that they do not have any other choice than to invest in an emerging market like India. So probably after this year 2020, after this year 2022, we'll see a steady inflow of FIIs, and that will actually lead Indian market for a very faster recovery, and that timeline we'll see. But then let us not assume anything at this point in time. It seems that the tough time is ahead and we should always brace for this. And all these things we are talking about right now is based on a US economy. For Indian market, we'll be doing a separate video, and in that video I'm going to talk about how the trend is evolving right now. So all these things will keep on guiding you, and also there are periodic videos about Nifty and Bank Nifty indices which are respected to Indian market. So we'll take a look at those indices as well in a due course of time. Guys, thank you so much for your time, and do like, share and subscribe to our channel Growth Module. Thank you so much.